I greet everyone with respect and love. My name is Selva Eren. I'm the general manager of Türk restaurants. It's very valuable to take part in this special conference. I thank all those concerned for their invitations. Very important names of the industry share valuable information with us on this significant topic today. First of all, I would like to talk about our company very shortly and briefly. Türk Restaurants was established by the Ministry of Treasury and Finance to contribute to the development of the insurance sector, to increase local reinsurance capacity, and to provide resource efficiency. In the 10th month of period since our establishment, we have provided capacity to the market in a significant volume by responding primarily to the reinsurance needs. In addition, we provide a very important capacity to our country's agricultural insurance pool, and we undertake the technical management of another pool, which is TCIP. TCIP is compulsory earthquake insurance pool provided by the Turkish government. Its objective is to ensure the compensation of the material damages on houses caused by earthquakes and the fires, explosions, tsunamis, and landslides that are caused directly by the earthquake within the limits of your policy. It serves as a model for many countries in terms of how the public and the private sectors can cooperate to finance disaster risk, basically. In line with the collateral size we provide to our policyholders, we have the capacity to pay 20 billion Turkish liras of damage due to our earthquake reserve and reinsurance facilities in the face of a major earthquake. We consider this payment capacity, which is created completely independent from the state resources, to be able to ease the burden on the public budget in big earthquakes. When we evaluate today's agenda item, these two pools are two very important structures for protection. I will try to share my thoughts with you about today's topic within the time which is allocated to me. First of all, we need to define the insurance gap very well. And then we have to analyze the reasons that make the gap occur, and also we should think about the potential actors of the solution. The most appropriate definition of insurance protection gaps is the difference between the amount of insurance that is economically beneficial and the amount of coverage actually purchased. Afterwards, identifying the causes of a gap one by one, we will enable us to determine the solution we will reach in a much healthier way. GDP, which rises at a certain rate globally, especially in developing economies, reveals new assets and of course new risks. In addition to this increase, we witness that the share of the insurance sector in the GDP has lost its power. In addition to this, the extent of the loss that occurs as a result of pandemics that we live globally right now, natural disasters that increase in frequency and severity, and other disasters increases very passing period. As mentioned in the disaster risk finance report of Swiss Re, the economic cost of natural catastrophes has increased remarkably. In 1980s, in the inflation adjusted cost of natural catastrophes averaged about 30 billion US dollar per year. In 1990s, this increased to 104 billion USD per year. Over the last decade, economic damage grew to average 190 billion USD. In terms of the percentage of the gross domestic product, economic losses from natural catastrophes have also gone up. I would like to explain my thoughts actually on solution ways with two different parameters. First parameter is individuals, especially with the inclusion of new generation in economic cycle, technological developments. We see the needs are changing and the world demands behaviors of the individuals are totally changed. This reveals new assets, new risks, and an insurable potential in this context. Therefore, the need of pragmatic shift of the insurance industry clearly shows the sector should respond to these changes with new products, new guarantees. That is, should be keep up with this change. In this way, the individuals and the potential of destructive changes of the individual's life to create gap should be minimized. Our second parameters are companies and the governments, the best way of governments and the public administrations to spread the risks, shoulder the costs of natural disaster, and ensure a swift recoveries to support the development of healthy insurance markets. However, many countries lack formal insurance programs for catastrophic losses and seek the funds to pay the recovery after a disaster has taken place. Risk prevention and mitigation must be the first priority in managing natural disasters. Hazard mapping, physical protection measures such as comprehensive building codes, for example, serve this purpose. Such measures also save lives and protect infrastructure. Transferring catastrophic risk to enable and sustain growth must therefore be a key element in financial strategy of every disaster-prone country and should ideally be a part of an integrated risk management approach. Today, there are a variety of initiative partnerships that can act as models for other countries to embark on risk financing strategies. These range from macro-level solutions for individual countries, pool schemes that brings together regional entities facing a similar risk, as well as micro-level schemes to make insurance directly available to individuals. As I mentioned before, TCIP serves as a model for many countries in terms of how the public and private sectors can cooperate to finance disaster risk. To summarize, this gap exists in our lives as a global problem. With the changing world, changing risks, changing human behavior, habits, and all these, changing beings should be set as an emotion. We must respond to these changes by changing. However, I think that the number of new pool structures to be established with the cooperation of countries should be increased very soon. Thank you very much for listening to me, and I wish you all a pleasant and a very productive conference. Thank you.